Performance. Everybody has their story about performance. Everyone wants to know. While we are not an alert service here at Zero DTE, we are a coaching and mentoring service. Our mission is to make our members independent, consistently profitable, professional level traders, and we focus on Zero DTE, or trading options on the Zero DTE event of the SPX. People want to know, how does it perform? I can't show you how everybody performs. All I can show you is what I do. And as I've said, everyone is an independent. They all learn at their own pace. They all develop their own skill level, etc. But I think it is representative, in considering that I look at this account as being the, quote, reference account for the service that I trade personally. I started back in June of last year, and so now we're about a little over 2/3 of the way through a year, and so this June would make one full year. But I think it's really representative of what we're doing, and there are some caveats to it, though. Let me just say that, first of all, I am probably the most distracted trader ever, at least here in this service, because I am running the service, providing support for over 1,000 members. I am doing a live stream, at least one, sometimes two live streams every day. I do 2 to 3 live interviews, orientation interviews with new members. And on top of that, I am running the Discord server where we are conducting our business. So in between that, I actually trade, and I trade to show other members, or to exemplify what the strategy is about and how to do it. Now, I'm not expecting them to do exactly what I do, but the new members, they want to see how it's done and then try to emulate that. So that's why I trade, and that's the performance that I'm going to show you. And I would expect that once somebody develops that skill level, we'll be able to achieve a similar performance. So let me tell you a little bit about this strategy. I started with an account that was $23,000, and I'm trading in both my Fidelity account and my Thinkorswim account with this. And the reason for that is that my Thinkorswim account, I can trade the E-mini S&P options on the futures, right? So I can't do that in the Fidelity account because they don't support futures. So that's the reason why I trade between the two accounts. My risk, or the risk that I take, is really part of what we recommend in the service itself. It's really rarely above 1.5% of my total capital. All of the results that you're going to see take into consideration commissions, fees, slippage, and all other associated costs. So everything is baked into these results. These aren't hypothetical results. These are my actual trades that I show people in the room, showing my actual account and the trades that I take. So this is real life, totally verified by the people that are in the service. All right, so let's get started. All right, so this is as of yesterday. I'm sorry, 2 days ago. That would be Friday, February 24th. And I'll show you everything. These are the end results, our current results. So if you look at the equity curve, you'll see that it is fairly well contained, very small drawdowns. As a matter of, down here on the bottom, the red part, those are the drawdowns, and it's in percentage. Above is the equity curve, and you can see it's like a stair stepper, some good advances, and then going sideways and going up a little bit, and then going sideways and up and sideways, like a stair step. Now, let's take a look at some of the stats. There has been a span of 248 days that I have been in the market with this strategy. I started with, as I said, $23,000. This is the current balance, about $34,000, a return of almost 50%. Our gross profit, gross loss, the net profit. So we've made a little over $11,000 since starting. When I say we, I mean I. Profit factor of 1.76. Total number of trades, 225. Now, this might be a very telling thing here For all you people that are into the high probability strategies, my win rate is under 50%. It's under 47%. All right, how could that be? How could you have such a low win rate and then have that kind of performance? That's what you're seeing. The important numbers here now are the average winning trade to the average losing trade with a win-loss ratio of over 2. So my average winning trade makes $244. My average losing trade makes $121. Now, my largest winner just happened this past Tuesday was $1,762. And again, that's only risking 1.5% of my account. Keep that in mind. Never make a trade with risking more than 1.5% of my account, usually closer to 1%. And the largest loser was also on that Tuesday, but that was the other side of the trade. So I put on 2 trades every day. I put on one above the market, one below the market. And then here's a very important figure down here, the max drawdown. 3.25% has been my max drawdown. And that was very early on, way back here I believe that was in August. Yeah, I think it was in August. Way back here. And where I went down, where I keep on saying we. I don't know why I keep on saying we. Where I went down 3.25%. And my average, here's another very important figure. My average risk to reward was 9.15. What that means is that I'm creating or putting on asymmetric trades. Now let me go back to the big head. I'm putting on asymmetric trades. Now let me tell you a little bit about the strategy. We trade asymmetric strategies. In other words, we're taking very tiny risk for large potential profit. It's that asymmetry that really works for us. We're trying to collect premium on the very last day of expiration of options on the SPX, so that gives us another edge. And most importantly, we go through a very rigorous process, a daily process, a weekly process. It is said, I call it a continuous improvement process that is built on agile principles. So I look at that also as a principal part of our strategy. That process, that continuous improvement, is what really keeps us stable and allows us to fix problems when they arise. Identify patterns of bad or good behavior. Good behavior, obviously, you want to continue, and bad behavior, you want to come up with some mitigation strategy to make it better. And in fact, that has happened quite often while I was conducting this trading experiment. Sometimes I would go sideways and start drifting off a little bit. I would look at my performance and see what I'm doing, try to correct it, and then typically I would go up again. And the same thing. So you keep on doing that and you're getting better and better over time. So that's generally how that works. So what I'm going to do also is I'm going to show you the actual trade log. And all of this is available on the website at 0-DTE.com under the tab that says trade log, and there you can look at all of the individual trades. You can look at all the stats. I update it. I try to update it as often as I can. If I can do it that day, I will. If it's the next week, then it's the next week. That's what happens when you're running a business. So let me show you the trade log. So here's the trade log. You can see here are the different things that we may trade. I don't trade all of these things. I've traded the SPX, the E-mini S&P, which is the ES, and I've also traded the XSP. I haven't traded any of these others, but they all have their own unique multiplier and fees associated with them. You can see that the E-mini S&P futures are very expensive. All right, and here's the win rate and the mean winner to mean loser. Now, one thing you'll notice is those losers typically go to 100% loss. And that is a benefit of taking asymmetric positions. So, like I said, we take very tiny risk to outsize profits so that when we lose, it doesn't invoke a lot of stress or panic or anxiety. And I look at that as another edge that we have in the market, because you're not going through those anxious moments. you're able to keep a clear head and make logical, rational decisions. So you don't fall into that fear gambit, that tailspin, go on tilt. That doesn't happen. Now, it can happen if you decide that you're going to overtrade and make your risk way bigger than what we recommend. But by keeping it where it is, you can see the benefit of keeping this super small. I'm still able to achieve nearly 50% return after 2/3 of a year by trading only 1%, or maybe a little over every once in a while, 1% of my total trading capital. And still, now I'm on track to make about 70% at the end of the year period. That will give you an idea and the other real benefit of trading small is that small drawdown, 3.25%. That is remarkable. When you consider that even the best traders, they would give their right arm to have a drawdown of less than 10%. Now, this is only 3.25%. Now, my first year of doing the service, I never went above 4%. So there's been good consistency throughout. So tiny drawdowns, very stable equity curves. You're not a lot of volatility. You're not going all over the place, just a stair step, nice and even. And that makes for a very comfortable way to trade. And that's exactly what we teach, how to trade that way. Now, I'm sure you would love to be able to do that, but you probably think that you need to do it with a high probability strategy. High probability strategies do not have long-term expectancy. In other words, you play them out over a long period of time and you're going to lose money. And that should make sense to you. You look at the stats for day traders, 98% of day traders lose money. Now consider this, a pro trader does almost exactly the opposite of what a day trader does. And that's what we teach here, our pro strategies and methodologies and process, continuous improvement process. So let's go back to the stats. As I said, some of the things that you'll notice over here in the net for each trade, there's a lot of streaky things going on. You'll see a lot of losses and some wins. All right. Here's a big streak of losses, but it doesn't hurt. Every once in a while, you get into those big winners too. So small losses, big winners, and sometimes really big winners. There's one for $1,100, almost $1,200. Here's one for almost $1,100. Then this one here, over $1,700. Now, as my account is getting a little bit bigger, I'm starting to trade bigger, right? So I've just recently started to move into trading more contracts. So as you can see, most of this has been accomplished with just one contract or one position throughout. That's this column here in column J. All right. So there's all the experience, the dates, etc., the amount that I went in at, the debit, and then the resulting credit, the return, the percent return, the risk to reward. I track the risk to reward. That's very important. And the total potential profit for each one of the trades, the width of our spreads, etc., all being tracked. Now, this chart over here is going to be very telling. This is the important thing right here, this return distribution. You'll see that we have something that all professional traders dream of, and that is this kind of distribution, which is called a right skewed with long tails. The long tails are where you make your money. The right skewed means that you have very tiny losses and a lot of tiny wins, and then a bunch of medium size and big winners. And that's what gives you that stair step type of very smooth equity curve. And that's what you're seeing here in this return distribution. And then the risk to reward frequency, the number of trades that I make, they end up averaging right around 9%, or 1 to 9. So these are all the different trades that I've put on. And we see that in the helper. So it's right down here, the average risk to reward, 9.15%. Okay, let's see, we'll get back to here. So there you go. There's the performance for the 0-DTE service. If you'd like to take part in it, Go down below. Zero DTE is all the rage these days. Everyone's talking about it. People are trying to figure out how to trade it. There are lots of services out there that most of them are trading the retail way with high probability strategies where people are leaving those strategies and coming to us after they realize that, yeah, it feels great to make those tiny little wins most of the time, and then every once in a while get slammed with a huge loss, and then slammed again with another huge loss, and before they're just so beaten up that those high probability strategies don't seem so high probability anymore. And so they come over here. If you'd like to give this service a try, we offer a 4-week trial. And if you join the service, I will rebate the cost of the trial. Yes, it's a paid trial because you're going to learn a lot. You're also going to get a lot of resources, a course, a trader's manual. The trader's manual now is up to about 60 pages. I expect it to be, or turn it into a full-fledged book that I will publish at some point. But it tells you everything that you need to know about the strategy, the process, even the mental aspect of trading, the physical aspect, exercises, the right nutritional program, everything. Soup to nuts in this trader's manual tells you how to become an independent, consistently profitable, professional level trader. All right. So that's all I've got to say. I want to thank you very much. Peace to you all, and we'll see you next time.